thank you all for waiting for our brief delay here. I'm Stephen Smith, Director of the Institute for International Economic Policy, and it's my pleasure this morning to introduce Ambassador Reuben Brigadier, Dean of the Elliott School of International Affairs here at George Washington University. Among his many accomplishments, Dr. Brigadier previously served as U.S. Representative to the African Union, as permanent U.S. representative to the UN Economic Commission for Africa, as Deputy Assistant Secretary of State in the Bureau of African Affairs. Ambassador Brigadier received his PhD in International Affairs at the University of Cambridge. We're delighted to have him here as our Dean and to welcome everyone to this conference this morning. So, Dean Brigadier.
Ladies and gentlemen, good morning. Welcome to the Elliott School, or for those of you who are coming from outside our fair city, welcome to Washington, D.C. I apologize for being late. I was humbled by the vagaries of D.C. traffic this morning, which is something of a tradition here in our nation's capital. But nevertheless, it is my pleasure to be with you this morning and to welcome everyone to today's conference, Inclusive and Sustainable Growth in India, Policy Challenges and Prospects. On the heels of the IMF and World Bank annual meetings, it is appropriate that we should discuss the multitude of questions surrounding this topic. How India can utilize macroeconomic policy to grow faster, what additional policies can boost infrastructure and urbanization, and what is India's response to climate change, and what is being done in the policy world to eradicate poverty. We have faculty, scholars, and experts on India from a wide range of institutions with us today who will delve deeper into these questions and provide meaningful discussions on the future of India. And let me say just for a moment that I've been dean here at the Elliott School for just over a year. And one of the things that I'm very hopeful that we will do on my watch is to broaden and deepen our engagement on India and other countries and matters on the subcontinent as one of the most important regions of the world for us to understand international affairs in the 21st century. Accordingly, I would like to extend an especially warm welcome to our distinguished speaker, Mr. Arvind Subramanian, Chief Economic Advisor to the Government of India, who will discuss India's reform challenges and unfinished reform agenda. In addition to his current post as Economic Advisor, Mr. Subramanian has also served as Senior Fellow at the Center for Global Development and at the Peterson Institute for International Economics. Formerly an economist at the International Monetary Fund, he is a widely cited expert on the economics of India, China, and the changing balance of global economic power. Mr. Subramanian is the author of two books. The first, India's Turn, Understanding the Economic Transformation, published in 2008. And the second, Eclipse, Living in the Shadow of China's Economic Dominance, published in September 2011. And he is also co-author of the book, Who Needs to Open the Capital Account, which was published in 2012. Foreign Policy magazine has named him as one of the world's top 100 global thinkers in 2011. Clearly an underachiever in our midst. From 1988 to 1992, he served at the GATT during the Uruguay-Rwanda trade negotiations. He has taught at Harvard University's Kennedy School of Government between 1999 and 2000, and also at Johns Hopkins School for Advanced International Studies between 2008 and 2010. He has written on growth, trade, development, institutions, aid, oil, India, Africa, and the World Trade Organization. He has published widely in academic and other journals, as well as publishing or being cited in leading magazines and newspapers, including The Economist, The Financial Times, and The Washington Post, to name but a few. In his current role, he advises the Indian government in different capacities, including as a member of the Finance Minister's Expert Group on the G20. He obtained his undergraduate degree from St. Stephen's College, Delhi, his MBA from the Indian Institute of Management at Ahmedabad, India, and his MPhil and DPhil from the University of Oxford in the UK, which I will not hold against him. We greatly look forward to hearing his insights this morning. Ladies and gentlemen, please welcome our distinguished speaker, Arvind Subramanian.
Good morning, everyone. First of all, let me thank Dean Brigadier, Ajay, and NIPFP and GW for inviting me to this conference. I think it's a great opportunity to be here at the time of the annual meetings to share some thoughts with all of you folks who are kind of interested in or working on India. I will try and be a little bit brief because I suspect that with all the students here, probably a more Socratic mode of interaction might be better than me talking down to you. So I'll try and be brief, and then we can throw it open for questions. I have to leave at about 10:10 or 10:15 if that's okay for another meeting. So since this is about India above all, but I think because this is happening at the time of the annual meetings, I do want to begin by emphasizing one very, very important point to set the stage for the discussion on India. And that is the following, which is that if you look at all the commentary around the world today, there is a sense in which the narrative is dominated and determined by what's happening in the advanced countries. So the narrative is one of pessimism, darkness, gloom, and so on. And I would absolutely strenuously insist that that's a very partial reading of the world economy. I wrote a piece in the FT the other day, essentially saying that in many ways, this continues to be a golden age for developing countries and emerging market countries. I say that because if you look back at the last 200 years, the predominant trend had been what economists call divergence, which is that rich countries start growing. Standards of living diverge from those in poor countries, but that 200-year history started getting rectified somewhere around the 80s. And that, in the sense that poor countries started growing faster than richer countries and catching up with advanced country living standards. And that narrative continues, or that trend continues, that exceptional, that trend to reverse 150 years of kind of pessimism continues after the financial crisis and is happening with a vengeance even. Why has it got obscured? I think it's got obscured because there was this brief period between 2003 and 2008 when the world boomed, but it was very unsustainable and very kind of, I think, an aberration. So when you compare with that period, everything starts looking gloomy, but I would argue that that was the aberration. And in fact, if you look at even what's happened after the financial crisis, the trend of developing and emerging market countries catching up with advanced countries is happening in spades. In fact, if you look at yesterday's IMF World Economic Forecast, world GDP growth, the forecast has remained unchanged. It's just that advanced country growth outlook has been revised down and emerging market outlook has been revised up, again showing that the differential between emerging and advanced countries is still, that catch-up is still happening in spades. Now, that doesn't mean we can take for granted that the prospects for poorer countries will continue to be better. I think countries will have to work hard at it. But I would urge you to resist this narrative that all is gloom and doom in the world economy. So that's my kind of opening remarks about what's happening around. And of course, you have to forgive me as an Indian for having that because there is a sense in which India is doing relatively quite well. So maybe I bring to bear on my assessment of the world economy, what's happening in India. But it is true that I want to talk about now India today, both the good and the challenges happening in India. So broadly, my first point would be that if you take an overview of the Indian economy today, I think two things strike you. First of all, that macroeconomic stability has been kind of established very solidly. If you just look back to 2013, where India was one amongst the fragile five. Came close to a full-fledged financial crisis when the Fed started raising or threatened to raise interest rates. And there was a big currency decline, capital flew out, inflation was high, the current account deficit was widening, and so India seemed to be on the verge of macro crisis. And today, if you see, that situation has changed completely. Inflation has come down. We have a high level of reserves. Fiscal consolidation has been going on for 2-3 years. So there is a sense in which, India is now like a haven of a macroeconomic stability around the world. And, even when all these blips that happened after Brexit and so on, I mean, you felt that India would be relatively immune to all these capital market type shocks that are happening around the world. So, a robust macroeconomic foundation to address all the challenges going forward. On the real side of the economy, what's happening on the GDP and real, what's happening to employment and so on, I think the economy is sending mixed signals. I think fundamentally things are improving steadily, but I don't think it's unambiguously buoyant or activities roaring ahead. And let me tell you what the mixed signals are. On the one hand, I monitor some measures of GDP, what's called nominal GDP, and there's been a steady upward blip in that, upward improvement. Tax collections are doing quite well in India. So it seems like on that score, the economy is rebounding. But I think there are at least a couple of indicators which suggest that, the economy is still being held back. First, if you look at actually how much credit is going to the industrial sector, to manufacturing and the industrial sector, credit growth is actually negative. So there's almost negative, so it's absolutely flat. So there is a sense in which private investment and credit are not picking up as they should. The other slightly recent worrying development is that India's imports have collapsed, non-oil, non-gold imports. That seems to suggest that, activity in India seems to be, again, a little bit challenged. So that's worth watching. And the other thing which is related to my first point is that, we've seen healthy growth, but it's been led by consumption, not by investment. Investment has in the private sector is overall investment is growth is negative. So you get the sense that the economy is being propped up by consumption and government activity, which perhaps is not sustainable in the long run. And also in the international market, international growth has been down, so our exports have also not performed as well as they did in the mid-2000s. But that seems to be kind of common to most emerging market countries because the global economy itself has slowed down. So on the whole, macroeconomy doing very well in terms of stability, but growth steadily moving upwards. However, with a number of drags that you see in the economy. Now, the next point I want to talk about is which is part of what was mentioned is the reform. What's happened by way of reforms in India? Now, I try strenuously not to be a spin master for the government. I think we'll all lose our credibility if we do that. But I have to say that if I were to tell you a year ago, if I were to tell those of you who follow India closely about a year ago, that the government would implement a series of reforms like, passing a bankruptcy law, codifying the institutional arrangements between the government and the RBI, passing a very important legislation which underpins our whole biometric identity program and on which subsidies and all kinds of financial inclusion activity is going to be based. It's called the Aadhaar. It's called Aadhaar, the biometric identity. The Aadhaar bill was passed, number 3. And if I'd also told you a year ago that absolutely a game-changing tax reform, which would be the envy, which is the envy of even countries like China and the United States, what we call the goods and services tax. If I had said, a year ago that all these things would be done in a year, I would have forgiven you for being a little bit skeptical. But in fact, indeed, that's what's happened. And I think these four pieces of very important, I think especially the GST, the goods and services tax, and the Aadhaar bill, which is going to be, the Aadhaar bill, just as an aside, is very important because a lot of India's, subsidy, financial inclusion is going to be based on this. And before the bill was passed, there was a lot of legal uncertainty about how and to what extent it could be used for many of these programs. And what this bill does is to clarify whatever legal uncertainty there was to allow the next phase of all these subsidy programs to go ahead without the uncertainty hanging, the legal limbo, as it were, overhanging this thing. If in addition I had said, we've done something to boost our clothing sector, and I think there was a big package there. And I had also said that the government is going after trying to encourage people to disclose their black money, and I had said I was a bit skeptical myself because these things in the past have not seemed to have succeeded, but in fact last week it turned out that about $10 billion of black money was disclosed, and that's going to bring in additional revenue to the government. So, and then recently, we started making moves on, disposing of sick private public sector units. So I think if you see this whole package of reforms, I think it shows that the legislative reform agenda is actually proceeding, very well, and many of these things, of course, in all these things where legislative changes happen, the proof of the pudding finally is going to be in terms of how they're implemented and whether they actually lead to change on the ground. For example, the bankruptcy law, it's one thing to pass the law, but it's quite another to actually get inefficient units out of business, and that's something that will have to be done. So, so stepping back and, looking at the reform effort, I think it's been, and all this has happened in the last 3 to 4 months, 5 months. And I think so, so the pace of reform activity has been very, very good and very encouraging. Now, what about the challenges? Because that's part of what you want to hear. I think we have an immediate short-term challenge, which is, I think, a pretty significant one. And we have, I think, what are more fundamental challenges to India being able to attain kind of 8 to 10% growth, which is the aspiration for the country, and which is something that we achieved in the past and something that I think is well within reach. Now, let me talk about the short-term challenge. I think, as I said earlier, credit to industry has virtually dried up. As I said, investment, especially private investment, is very weak. Now, the reason for that is what we call the twin balance sheet problem. Basically, the corporate sector in India is over indebted for a number of historical issues, largely related to the fact that there was over exuberance during the boom years of 2000, between 2002-3 to about 2010-11. Corporates overborrowed, they're over-leveraged, and they're in great difficulty, and that continues to weigh over the corporate sector in terms of their ability and willingness to invest more. At the same time, the mirror image of that is the fact that banks, especially the public sector banks in India, their balance sheets are not looking very strong. So a combination of public sector banks being weak and the corporate sector being weak as well means that both the ability of banks to supply credit, the willingness of the private sector to be able to borrow and invest, it remains weak. And I think that this is, unless we kind of address and tackle this challenge, it will not be so easy to reach the 8 to 10% growth target that I think the policymakers have set for themselves, and I think which I said is going to be important. Now, I'm happy to talk about these challenges, this short-term challenge. The one, sorry, I did want to say one thing on this, what I call the twin balance sheet problem. I think what I've said is true, is very important. This thing has the potential to hold back India's growth and kind of come in the way of achieving 8 to 10%. But I think one shouldn't at all think that this problem, serious as it is in any way going to create any sense of financial panic or crisis in India. The reason I say that is the following. Just to get a sense of perspective, look at the numbers. If you look at how much private sector borrowing there has been from the banks in India, it's about 55 to 60% of GDP. If you look at China, it's 265% of GDP. Now, so even if you took a really, really adverse scenario where, 50% of the non-performing assets are basically devoid of value, what you come up with is that it's a kind of hole in banks of about 3% of GDP, which is very easy for the government to fill. So in that sense, there is no sense of, oh my God, there's a financial crisis in India because bank balance sheets are short. It's just a sense of what I would call a kind of slow bleed, where the inability to supply credit, the inability of the corporate sector to borrow and invest kind of holds back growth and keeps it away from medium-term potential. Now, what are the more fundamental challenges? I think many of you have, in your, Ajay and others, and Rakesh and Subir and Ratin, others have all written about, for example, lack of progress on, say, privatization, for example, or in, fundamental subsidy reform or things like that. I think that there is a kind of deeper issue that all of us have to confront when we talk about India, which is that, this is something that we alluded to, we wrote about in the economic survey that, we produce once every year, which is that I think it is very difficult. One of the ways I would characterize it is to say that, we used to be an economy that was very inimical to, what I would call entry, new firms coming in, foreign capital coming in, new talent coming in, and all of those things because of a whole panoply of controls, which I think was beautifully and memorably characterized by, the great and possibly the only Indian economic liberal, Rajagopalachari, when he said India was a license, control, permit Raj. I think we made tremendous amount of progress in undoing that license, permit, control Raj. And one of the things I didn't mention, which I think the government deserves a lot of credit for, is in kind of freeing up FDI. And in fact, India was the largest recipient of foreign direct investment last year, I think surpassing China. But I think where we're having much greater difficulty is exit. It's very difficult to, actually wind down unprofitable activity in India, inefficient, unprofitable activity in India. And what we documented in the economic survey, that it's pervasive, it's across the board. It's in agriculture, it's in manufacturing, it's in the public sector, it's in the private sector, it's in manufacturing, it's in services, it's across the board. And I think we need to reflect a little bit deeper on why that is the case. Why is it that we're finding, exit? Because I think a good market economy requires a strong state, but it also requires, genuinely embracing competition, which requires not just, entry and firms coming in, but also exit. But I think that underlying that, even that problem is something that, we're going to, I certainly want to write about in the economic survey, is that we've moved away from socialism in a very decisive way. But have we, is there a critical mass in the political ecosphere that genuinely embraces competition in a market economy? And it's an open question. I don't know the answer to that. I certainly think we've moved away from being socialist to being pro-business. But whether we've taken the next step of becoming pro-competition, genuinely embracing markets in a very fundamental way, like what many economic liberals would want, I think it's an open question. It's a work in progress, and I think we need to reflect more on that. And I think because in some ways, the more fundamental the impediments to maybe some of the deeper next stage reforms that we need could hinge on getting this critical mass of a genuine market-based economy in the intellectual and ideological ecosphere. And I think that would be I'm not saying there isn't one. I'm not saying there is one. But I'm just saying that I think it's something that we need to think about and how to. So it's kind of an explanation for the question of why don't kind of more Sadanand has just entered the room, and more fundamental reforms of the kind that Sadanand would advocate. What are the more fundamental impediments to that? I think it's much deeper than just party and BJP, Congress, and all of that stuff. I think. As a nation, and I think we need to move more in that direction. So I think having said that, I think that in the short run, I remain very, very. The monsoons have been good this year. Inflation has been coming down. Interest rates are being cut. I think that the economy is going to, for this year, we had forecast something like 7 and 7.75% for the year. I think we will probably be at the upper end of that range for this year. And if we continue the pace of reforms that we're doing, grapple and kind of take on this short-term challenge of the twin balance sheets, I think there's a lot to be hopeful about the Indian economy. So I've kind of spoken too much, but I'm happy to answer any questions. Yeah, thank you.
I don't think I need to configure this or in any way, but Stephen just asked me just to manage it. But thank you so much for that very, very balanced, I thought, presentation. You've given us the all the pluses, but also you identified a lot of the problems. But let's see if we have. I don't need to compare this for you. I mean, you can handle this yourself, I think. But any questions? Yeah,
Sam.
So I guess you talked a lot about.
Great. Can you guys hear me? Yeah. So Arvind, thanks. You talked a lot about macroeconomic strengths and weaknesses. Not that much apart from some of these reforms that could be thought of as somewhere in between, about microeconomic challenges. And so I guess I'm wondering, when it comes to roads, electricity, and a lot of the other things that are holding back, just take the manufacturing sector, who you're describing as having a weak balance sheet. I mean, do we really think that debt overhang is the primary concern of the industrial sector, or do we think that there are a lot of microeconomic challenges that are preventing them from making investments that we'd like them to be making?
Yeah, Sam, that's a great question. I thought you were going to ask about the even broader question of service delivery in India more broadly, and let me make it more difficult, the question for myself. I think that there is, look, in the short run, there's this big macro, kind of albatross around the neck, which is the twin balance sheet. But of course, there's the whole regulatory agenda, the the infrastructure agenda that's always going on. I think the government has done a lot on this ease of doing business. We've climbed up the rankings very dramatically. The reason I hesitate to go into that is because then it's in the nature of micro reforms that every sector you have to talk about, its own challenges, for example. Now, take, for example, roads, which, you've studied a lot. I think that one of the areas where roads are kind of picking up now, public investment in roads is picking up. But again, we have this situation of what's going to happen I mean, how will the private sector come back in roads? And if there is one theme that I think for me permeates all of this, it's the whole question of state capacity, whether it's service delivery or all the things that you and I are interested in. Now, we know that state capacity is a really fuzzy beast. It's all things to everyone, and all of us can wax eloquent in characterizing the problem, but I think we all have really don't know that much about how to improve state capacity. And I'll be honest with you, the judicial reform, police reform, civil service reform, all these things are terribly important. But let me say one thing which I think to me is a fundamental problem about state capacity, which kind of affects, it's kind of has a generic and horizontal in its implications. I think that if you look at India over the last 10, 15, 20 years, for a variety of reasons, the executive and the legislature lost legitimacy, and the what Devesh calls the referee institutions acquired a lot of legitimacy. Right, the Supreme Court, and then the CAG, then the CBI and the CVC. So now we're in a situation where, for good or bad, these referee institutions are very, very important, and sometimes I characterize this as perversely, we may have weak state capacity in some sectors, but we have very, very strong referee institutions in other respects. What it's done is that it's induced this absolute, paralysis in bureaucratic decision making. If you think about the public sector banks, no public sector bank manager, I'm talking about the honest ones, forget about the corrupt, whatever, very few honest bureaucrats feel empowered to take the right decisions, because all these decisions involve risk and the way the system has turned out, that if you take risk and that's seen to favor someone, which it will, I mean, any decision you take will favor someone, you're very vulnerable to the referee institutions. So one aspect of state capacity which I've found, which I've actually learned going, is that, and this applies to service delivery, all these sectors, is again a deeper problem, that this imbalance in kind of institutional strengths has induced a lot of difficulty in decision making, which I think is another fundamental challenge, which affects micro and macro as well. And then, of course, you go to the state level, it's a different ballgame altogether, but that's another whole story.
So we have Sunil there. Maybe you could just identify yourself.
Sunil Shara from the IMF. I'm sorry I came a little late, but this is sort of dealing with longer-term challenges. I'm surprised you haven't mentioned anything about the labor market or universities.
Or?
Universities. I mean, where are India's world-class universities, right? We've been at it for the last 20 or 30 years. And if you're thinking of 8 or 10% growth in the new environment, we're talking technology adoption, we're talking innovation, we're talking growth of services. So the question is, what is the state doing actually to facilitate?
So Phil, he's a friend of mine. Let me give you a provocative response to that. See, obviously, higher education is basically symptomatic of a decline in state capacity across the board, and higher universities are part of that. But the one thing I would resist is the notion that India cannot grow without technology and high skill, value added, et cetera, because I think fundamentally our wages are still so low that the next 20 years of convergence should be based on exploiting our still comparative advantage in unskilled labor. So, I don't care very much if, our ability to produce technology is poor, because that's not what we need over the next, maybe we'll need it after the next 30 years, but for the next 20, 25 years, technology is a given as long as we have the ability to absorb it. We don't need to generate it or produce it, because I think the real challenge is the first part of your question, which is, what's happening in labor markets, especially in unskilled labor markets and so on. So I think is the bigger challenge. I mean, don't get me wrong. I mean, I think we need to have world-class universities. We need to arrest the decline in our higher education and so on. But all I'm saying is that if I randomly picked 10 of you and asked you to say what is the binding constraint in India, each of you will say probably different things, and there is no way of saying who is right or wrong, because I think these are all education, primary education. If you look at what's happening on learning outcomes in India, all the Pratham stuff, I mean, that's pretty worrying as well. So who am I to say whether that's lesser priority than higher education? So I think there are I think one needs to have a sense of perspective on what is important and what's not. But I do think over the next 10, 15, 20 years, we have to try and take advantage of the convergence play, the fact that we still have cheap labor, and try and make that work going forward.
Right here.
Thanks, Arvind. As usual, a very good presentation. So my question is on the banking sector. You did recognize it is an issue, and you gave an estimate, perhaps NPLs, which need to be resolved at 3% of GDP, perhaps a conservative estimate.
No, the 3% would be in the event that you have to,
They need to pay.
the fiscal outlay. Yeah.
So even if the estimate is below and above, it's still quite a large number, right? And is there any thinking going on currently in the government to address this issue? From what I have seen last 2 years, the narrative hasn't changed, right? Maybe things haven't improved even if they have become worse. But I don't see anything coming out in terms of what is the solution, what is the way forward. And in 2 years, we'll be facing another election. So I don't know what is the thinking.
No, I think there's a lot of thinking going on in terms of what's happening, and I think there have been some developments as well. Look, I have a view on this, but that's not necessarily the government's view. I think we need to do three things, right? We need to find the money to fill the hole. One, I think second, we need to have a mechanism by which there's a resolution for resolving all the assets. I think there's more and more talk of a bad bank, which I think is something that's worth considering. And then the third piece of the puzzle is that even if you did 1 and 2, what do you do about preventing the problem from recurring? And in some ways, I think that is the bigger challenge. Because, coming back to my fundamental challenge about, the ideology, as it were, the ideological ecosphere, I think there is no appetite, this is bipartisan, for really getting government ownership in the public sector banks to below 50%. If you can't do that in some way, you can get a temporary fix. You can solve the current problem, but you can't solve it, on a permanent basis. I mean, it's true that to some extent there's a kind of jugaad thing that's beginning to happen. The private sector banks are beginning to become more important. New types of banks have been licensed. But my sense very strongly is that the experience of civil aviation and telecom, where you could grow the private sector and shrink the public sector, is not a viable option, because we know that what happened after Lehman, that when there's a crisis, people flock to the public sector banks because this is Bharat Sarkar's backing there. So I think, and I don't have I think there are ideas out there in terms of how this might be done, but I think that is a fundamental challenge. But I think you are going to see, a consideration of more, innovative initiatives in this regard, including maybe, certainly, more discussion of a bad bank, for example, I think is going to be on the agenda. What will happen remains to be seen.
So we have several, should we just collect all the questions?
Sure, whatever,
Given
yeah.
your time, you can then, we can choose
Okay.
an answer. So, just introduce yourself.
Thank you, Dr. Subramanian. My name is Aman Thakkar. I'm a student here at GW. My question is actually about trade. I know you talked about how the government has been focusing a lot on bringing in investment, but on trade, India's major trade agreements with Australia, with the EU, and with RCEP continue to be sort of slow. And the major allegation coming through is that India is acting very protectionist in some of these negotiations. What can you see as being the way forward for India, and how can it improve and liberalize and move forward on some of these important trade agreements that India needs for some long-term growth.
So we have Vikram and then Remy. Oh, okay, sorry.
Thanks, Arvind, for your talk. And since you've studied China and India, you well know that one of the reasons for China's very rapid growth has been interprovincial competition. Provinces have competed against each other very hard for providing infrastructure and so forth. Do we find interstate competition in policy in India? How large a driver of growth is that? Is that accelerating? And if not, why not? Thanks.
So let's take Remy and then we'll bring it back to Arvind and then another round perhaps if he has time.
I'm actually Manny Teitelbaum from Political Science. No problem. Thank you. Thank you for your talk. I came in a little late, so I hope I didn't miss it. But I wanted to pick up on the earlier thread about labor markets and also relating to interstate competition. I think one reform a lot of people expected the government to make when they came into power was labor market reforms, reforms pertaining to labor legislation. And my understanding is that the central government has largely punted on that because of the politics involved and has left the issue to the states and intends to rely on competitive federalism to address the issue. So given that, is there anything that the central government can do to actively improve labor markets and take advantage of India's large pool of low-skilled labor?
Yeah, again, great questions. On trade, I think it's very important, at this time, at this conjuncture in the world where, globalization is kind of being buffeted and you're seeing the backlash. I think it's terribly important for countries like India and others to kind of stand up and say, this is actually terribly important for us, for our growth and so on. I mean, China is the exemplar of a country that's actually, transformed itself based on trade. And so if world markets started closing down because of this, I think it would be terribly unfortunate. But therefore, and that's why the question is very important, therefore, I think we need to be seen to be doing our bit in pushing the trade agenda and opening up our own markets in order to credibly say, look, we're opening ours, all of you should also open yours, at least not starting reversing your thing. Now, my own sense is that actually things are changing in India on this. And I say this partly because I'm a little bit involved in some of these issues. I think going forward, you will see a fair amount of enthusiasm and movement in terms of our trade relations with the UK and the European Union. It's true, the agreement, the negotiations with the European Union have been kind of stuck for some time, similarly with Australia. But I think what is going to start changing the perspective is really employment. I've just done a study which actually presented it to some policymakers in India, which says that, if you look at India's trade with the European Union and just see what would be the employment impact of a free trade agreement, I think numbers are quite striking, and they're striking for a very, very simple and obvious reason. Our imports from the European Union tend to be capital intensive. Our exports tend to be highly labor intensive. So if you did an agreement, I think the employment consequences would be very beneficial. So it's that kind of thinking and logic. I think it's going to move us a little bit more, open to that. And I'm actually quite hopeful that we will be very proactive in this agenda going forward. So that's on trade. On the last two questions, Vikram's question, I think a great question. I've always been of the view that, cooperative federalism, of course, but competitive federalism was what was really was the dynamic that was going to drive, reforms and growth in India going forward. The classic example, of course, was what happened with the nano many years ago when West Bengal, rejected that. And I think, 7-8 states came up and said, we'll provide the incentives, do that. I think it's happening more and more. But it's not happening, Vikram, honestly, as much as I was hoping or I was expecting. Now, you see, it's certainly happening at the level that one, every chief minister is going around courting investment and saying, we'll ease the cost of doing business. So there is a competitive federalism going in terms of easing the cost of doing business. Each state wants to be top of the rankings. And so there is that dynamic at play. But I think that where it hasn't happened enough, and a little bit relates to Sam's question, is I've still been struck by why we don't get this competitive federalism dynamic in terms of delivering essential services. Why is it the case that there isn't an opportunity for states to say, if I do basic education and say I reverse learning outcomes by 10 percentage points, why isn't that going to attract similar things in other states? So in terms of economic, and of course, coming back to the question, we see also competitive federalism in terms of labor reform. As you said, the government decided that this is something that competitive federalism should take over. By the way, there's still a role for the center in labor laws. There's a lot of simplification that needs to be done. And there are some initiatives which actually the government is seriously contemplating, things like making contributions to these social protection schemes kind of voluntary rather than mandatory. It's something that the central government could do. So there's still a role in terms of simplification of laws, but it's true that most of it is going to be done via competitive federalism. So I think on the Gujarat has done it, Madhya Pradesh has done it. Now even on the land law, I think, for example, it's again going to be Tamil Nadu has started doing some of these things, but it's not happening. It's happening to some extent on the economic front. Maybe it could be faster. But certainly on the social service, the delivery of services, I don't see that happening. So to me, the puzzle, the deep puzzle in India on that is really, why doesn't, good economics in the form of, better delivery of services, why isn't that good politics? I think that, remember, Vikram, we shouldn't be too pessimistic, because there is no doubt in the last 2 to 3 election cycles, generally, on average, better governance has been rewarded and poorer governance has been penalized. So the competitive, just to give you one example, all those state chief ministers who've been elected 3 times are all states that have delivered agricultural growth of about 8% or so. So there is, because I think competitive federalism requires, an experiment somewhere succeeding, that being imitated, and finally, in a democratic setup, being rewarded electorally. That's very important. And I think some of that is happening, but I think it's not happening enough on the delivery of services, essential services, let's take, I have a meeting at the IMF at 10:30, so.
Okay, so maybe we'll just take Deepa.
And Rakesh wants to ask a question. Yeah, please, go ahead. Oh, okay. Deepak, sorry.
Very quickly. Great talk, very engaging. You mentioned something about state capacity as a constraint to growth. And I wanted to prod a little bit, is it really the ability of the bureaucrats and the government, or is it the willingness? Because, when I walk on the ground, and I have never come back not impressed with the Indian bureaucrat in terms of their global understanding, not only the points, but the counterpoints to issues. And I've worked in Vietnam, in China, and I don't get the same sense of it. So is it that these people don't know what to do, or they don't want to do it because of other reasons? And which takes me to the point about, you said something about the mindset. And is that the real issue? Has India really transitioned out of socialism with a clean break, as the Eastern European countries did, as some of the other countries have done?
So let's take 2 more.
I'm Dityapriya. I'm a student here at GW. And you talked about increasing state capacity, and also that there isn't competition among states in delivering, social needs and all of that. So how about what if states actually, about contracting or subcontracting certain some of these deliverables to, say, the private sector? Would that attract more investment and solve the bottlenecks and the constraints?
Rakesh will have the last word because I have to go.
Thank you. No, actually, apropos some of the earlier questions on states competing with each other, also general issue of delivery of services. Now, there's been some progress, as you've been talking, on comparative federalism, but not below that. So, because one of the answers to this question is, given the size of our states, and again in China, the mayors compete, the cities compete with each other.
Very good point. Yeah.
Whereas our cities or local authorities just not empowered. And if you have a country like UP, I'm saying country with 200 million people, that this kind of delivery of services, competition can't happen. And I don't see any sign of discussion on the federal government or central government having decided to give more powers to the states, more fiscal devolution, etc., but no discussion on below the state level.
So let me start backwards because I think it's firstly it's a great point about in fact the first piece of that I wrote for the government. I mean I did say that we need competition between states and between cities as well. The problem, Rakesh, as you well know, is that as Raja Chalaya famously said, everyone believes in decentralization up to his level and not below. And the states are, because it's going to be up to the states as well to devolve more of that. And I think even the most enlightened of state chief ministers are not willing to do that. Now, the question is whether the Prime Minister's Smart Cities program is an opportunity to, in fact, do that. And I think that if you could make the smart city program, combine it not just with doing all the building of the infrastructure, but also building a kind of accountability and governance mechanism at that third tier, I think would be certainly add to the churn and the juice in India of the competitive federalism dynamic. So I certainly agree with that. On contracting out to the private sector, you see, it is part of. Are we off the record, by the way? Because this is. I mean, this.
It is being taped, but you are off the record as far as we are concerned.
Yeah, no. I think a part of what I said about the fact that we haven't embraced, in a truly fundamental ideological sense, a kind of market-based economy, I think that's always going to be come in the way of the kinds of solutions you're proposing. Mind you that I'm myself a little bit conflicted because there is the usual dynamic that if you start contracting out and get this exit business going, the pressure to improve state capacity gets attenuated, and we don't want that to happen. I mean, in some fundamental sense, we need to have a leaner state but a much more effective state. So we can't think of subcontracting out basic services like health and education and so on. So it's a kind of double-edged sword, and you have to do that very carefully. Deepak, your point about ability, willingness, and your experience with Indian bureaucrats, I think it's okay. Let me say something. While I think that Indian democracy is something that's really something we're proud of, and justifiably so. It's just incredible. But state politics in India, I think, is something we need to kind of think about more carefully and examine. Because the kinds of strengths that you see at the center, I'm not sure whether you see the same at the level of states, even in terms of how kind of competitive or rich state level politics is in India. So much of it is dynastic politics at the state level. So I think the quality of politics at the state level in India, I think is something that let's say, I think is a work in progress, I think. And I think because that is important to how to improve state capacity, at the level of the states, what the incentives are. I think where you're right is that I think certainly, okay, let me say where you're right and where I actually, a final point I want to make is that there is a capacity issue, and the point that Devesh Kapoor makes a lot is that, we look at the civil service as IAS, central services, but the frontline bureaucrat who actually, whether it's the BDO, the police officer, the teacher, the frontline person actually delivering the services at whatever the last mile, the retail level, there I think there's a huge capacity problem in terms of training, work allocation, incentives, everything. So I think that is really a big problem.
Well, thank you so much, Arvind, and for just a very great start to our conference. I know how busy you are, but just watching Arvind, he is so brilliant. And just the way he presents, what I'm always admiring is how you present your ideas. And I can just picture Arvind in front of Prime Minister Modi or the cabinet. And I just feel how lucky we are to have a chief economic advisor like Arvind Subramanian. Thank you so much, Arvind.
Thank you very much. It's great to be here.